Hey, good morning. How are you? You guys ready? Hey, it's Monday. Wake up. Yeah, another glorious trading day. Wow, Asia was fantastic. All right, so let's get going. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders stationed around the world, watching the clock, watching the chart 24/7. And then we get together here every morning before the New York stock market opens to share our intelligence that we gathered, synchronize our watches and our plans. Very, very cool. And even debate a little bit on direction and fundamentals and all that kind of stuff. There's so much information going on. As I tell people, Forex is pretty straightforward. You just have to know absolutely everything in the world, accurately predict the future every single day. Besides that, it's pretty easy. So that means we need to collaborate, and that takes participation. So thank you for being here. Thank you for your positive energy. Thank you for being a subscriber. If you're new to the community, please subscribe and turn the alert on so that you can join my daily live stream. Also, I'd like to thank you for being a client of Trader's Way. As clients know, Trader's Way offers fast execution speed, narrow spreads, huge swaps. They even open probably an hour before your broker opens. Have you noticed that? Trader's Way trades an hour earlier than many brokers. You're like, interesting. Oh, whatever. So that's really cool. Ultimately, you need a broker that earns your trust and your loyalty. And Trader's Way did that through the Swiss bank debacle of whatever, 8 years ago. And it proved to me right then and there, I trust Trader's Way. Boom. Just like that, from the actions, not from their promises, from their actions. And I'm like, that's what I want. So anyways, check them out, man. Check them out. Tradersway.com. Yo. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. And hey, my name is Wayne. Sorry I was a couple of minutes late. I realized I didn't have a coffee, so I ran over to my office kitchen and then realized I have like 2.5 weeks worth of empty coffee mugs, all in the dishwasher, but then I have no clean ones. I'm like, oh my God, I haven't run the dishwasher in like 2 weeks. So I had to run the dishwasher, and then I'm like, wait, where's the little Tide Pods? So then I got to go find the Tide Pods, and then I'm like, oh, I got to empty my coffee thing because there's no bag in the trash because we had emptied it last night. And I'm like, oh my God. So anyways, here I am. So much drama. So cool. I'm looking forward to today. There's a lot going on in the world. How many people here traded Asia last night? Cool, right? So we'll talk about that. I'll tell you what a Canadian does on a Sunday night with cold weather. I sat outside at the fire pit, warm clothes on, got a big fire going, smoking a cigar, of course. I had a nice wine going usually, right? But it could have been a whiskey, it could have been a beer, could have been the whiskey, might have been the gin, could have been the 3 or 4 6-packs, I don't know. But anyways, sitting by the fire like a good Canadian with my cell phone open, watching the charts live and listening to Bloomberg as they reported economic data being released by China. like living the dream. How do you trade Forex? I sit by a campfire and I trade. Oh, is that righty? So cool, man. That's what the Wayne do. So I hope you do something similar. I hope you enjoy your job. Yeah, hope you enjoy your job. So again, just please click the subscribe. I don't know where the button is. You know, you're a YouTuber. Subscribe and cool. Also in the description below, there's links to Trader's Way. There's links to my book. There's links to a free training course. There's links to paid training courses. There's all kinds of resources available to you if you want or need. So here we is. Let me get my drawing tool. All right. So, any change in the yens? Not really. Any change in the dollars? No, not really. Any changes in the Swissy? No, not really. Any change in the CAD? Oh, yeah. Yeah. So, kitty CAD up. We'll say no change here. So that's interesting, but not against these. Too bad. Any change in the euro? Accelerated downward move, but that's interesting. How about pound? I'd say it's stabilizing, maybe up. Might be too early, but it's interesting. Technically, there's a lot of reason for this. And by the way, my day trading group did meet last night before the market opened, and we set up all their trades for Asia. Oh my God. Yeah, we met on a Sunday, which we always do, but typically we've been meeting at 8 o'clock. Now we're meeting at 4 o'clock in the afternoon, setting up our trades. And as soon as we were done, chow, the market opened. Because again, Trader's Way probably opens up an hour earlier than your broker. So at 5, the market started trading and we already had our plans done. Mr. Singham. And then Aussie took off, and that's related. And Kiwi. This is related to the China news, which we can discuss. And that's what I was trading live. Mr. Singham says you can clearly read the Harvard. Yeah. The vertical ones, I don't know if you know how to read degrees. The vertical ones are graduate degrees or graduate work. So one of these is my graduate degree, and the other one is postgraduate completion of studies or whatever. So one's a degree and one's just a certificate of completion for studies. Interesting though, right? Oh, and of course, got my Harvard Business School sweater on. It's actually incredibly warm. It's one of my best sweaters. It's crazy. It's lamb's wool or something. All right, whatever. There you go, Mr. Sangham. All right. So, should we just do it? Should we just talk? Should we just? Yeah. Well, I guess let's do it. Let me just bring up the actual data off of Forex.Today, and then we could talk about what it means, what it could be, what it would be, what it should be. Hey, that guy looks familiar. Right. Let's do that. All right. So, interesting. It's not listed as this week. And I can't do last week. That's interesting. So what was yesterday? The 14th, I guess. So let me do a custom date. It's not reporting it because it's not begin date 14, end date 14, apply. And whale oil B. It's just not showing it. Interesting. Let's do 14 to 15, and maybe it'll squeeze it in there. 14, 15. All right, well, it's missing some news. Interesting. All right, so, yeah, I'll leave this open so we can go through the rest of the week. We can do it this way. All right, so let me go from memory. Retail sales came out, and it was better than expected. So that's good. The Chinese consumer is spending and spent a little more, not outrageously more, but the news wasn't bad. So Chinese retail sales was up. However, if you look at the subcomponent of the report, from the ages of, I think it's like, I don't know, 20 to 36 or something, if you think about young workers, unemployment is quite high, and spending was, I think the young unemployment rate is like at 14%, even though the headline unemployment rate is only 4.9. And therefore that was reflected in retail sales, where spending overall was better than expected. However, not at those young ages. And you can see why. You could see things like there's a negative impact from the real estate market because of over leveraging. And, they're going through a readjustment like the Western world did back in 2008 when, like the United States, for example, the subprime market was way over leveraged. Well, China's kind of going through that, and it kind of needs to be done. Okay. They're also introducing regulation into the financial system and all that kind of stuff. So these are painful moves, but they're okay moves on the long run. I did invest into Chinese ADRs when they were down about 50%. I figured that was a pretty good place to buy. And I'm above break even on those. And there was one other thing. Oh, industrial production and capacity utilization was stable, at least. I think it was a little bit better. I'm going from memory, but at least, I mean, there's no sign that we're at a bottom. But if it's going to get worse, it's going to get worse less fast, or we have kind of found a shorter term, at least stall, maybe a bottom in some of the stuff happening, right? Out of China. Cool. And of course, in the group last night, we were talking about the impact of the Chinese economy on global trade and how it's important to currency traders and stuff. So it was interesting to get pretty okay news out of China last night. And so what should you do if you get pretty good news out of China? What should you buy if you were a currency trader trying to capture pretty good news or less bad news than expected, which is to currency trading the same thing? What should you do? Good morning, Maida. Or Mida. Aussie. Not necessarily Aussie dollar. That would have to be a relative strength thing. But, if we're zooming in here, how many hours ago was it? Obviously we see some sort of appreciation. Okay. Yeah, and Johnny's right. You would also look at Kiwi, probably second. And you would expect, less bad, maybe even some good. Okay. Is the dollar index a basket? Well, that's what an index is, James. Okay. So when we're looking at Aussie dollar, James, it's the Aussie dollar versus everything. Okay. Dima says buy commodities. Yeah, maybe. Yeah, maybe. Less direct, but similar, right? That would be a correlated move. It's less direct, but it would have some sort of relation. But, okay. Yep, that's right. Raymond brings up that exotic currencies are doing well. Once again, it's all related, right? Where I think we're going to go into more of a Goldilocks economy where the Fed's not going to raise interest rates for years, even though there's still a giant debate about what the Fed's going to do. I don't think they're going to raise interest rates. And that's really good for emerging markets. And then if China is getting healthy versus, if the fear of a Chinese slowdown gets stronger and stronger, that if the fear gets stronger, then exporting nations to China, like Australia and New Zealand, right? Not Japan, but anyways, China and or Australia and New Zealand, they would be hurt, but just emerging markets in general would be hurt as well, right? Because China is such a large purchaser of stuff. It's such a large economy. So if we find like the U.S. is okay and they might not raise interest rates for a while, and China is stabilizing, then yes, you would see that immediately in exotics for sure, right? So that's cool, but we may debate. Let me give you a debate. Okay. The head of Morgan Stanley, okay. His name is James Gorman. James Gorman or Gore. It's something like that. Gorman. Something like that. Anyways, Jimmy G. Okay. He said the Fed will raise possibly twice next year. Okay. James Gorman is the CEO of Morgan Stanley. Okay. That's what the head says. Do you know what the chief economist says? I don't know his name. Economist. Okay. But do you know what? They just released a report. They're right. No rate hikes until 2023. I think it might even be late 2023. The chief economist and the CEO publicly released two opposing statements of what's going to happen. It's the same freaking company. It's the same bank. Well, they're not a bank. This is one of the financial institutions that's not a bank. But, dude, they don't even publicly agree. So somebody's going to lose their job, probably not the CEO. But anyways, so look, man, I told you dollar's going to be complicated for a while because not everybody agrees. There's very little middle ground, right? It's right. On one side is Trump, on the other side is Biden. On one side is Sanders, the other side is Musk, right? Just nobody wants to play, right? But that's isn't that remarkable? Wouldn't you agree that's remarkable? That these guys publicly, right? Publicly disagree. Or at least don't talk. Wowzer. So look, if you see the market is a little bit choppy at times, that's why. Okay? No, we'll deal with it, James. That's all. We'll deal with it. Right? What if an asteroid hits Earth tomorrow? What are we going to do today? Nothing. Right? We'll deal with it. Don't trade the fear, but be open-minded to being wrong. You don't want to say, well, I'm hell-bent on doing this one thing because I know I'm right. That's where poverty lives. That's where bankruptcy lives. You know you're right. Okay? I would rather you have your opinion based on research and then you trade your opinion using technical analysis. Okay? And so we'll go through that today. In fact, why don't we, do you want to do that now or do you want to do the calendar? Get it? Yeah, knock it out. I thought I had it open, but I must have closed it. So let me open it again. You are the one. Oops. Ugly, with your smile so worn and your teeth so green. Baby, you smell like Vaseline. And the way you look tonight. All right. Yeah, this week. Okay, cool. Boom. RBA meeting minutes and housing data. Ooh la la. And Lowe is going to speak. Now, by the way, Governor Lowe is a good speaker. Okay. Okay. So that's a good one to pay attention to. You should probably watch it. It's actually pretty good. Okay. Right. Now we get job report out of the UK. Remember, people are master debaters about the Bank of England, whether they should raise interest rates or not. And of course, we know central bankers are paying close attention to not just inflation, but wages and job growth. And so that is going to be pretty interesting. So you want to look at all that. Average earnings, unemployment rate. So average earnings are going up. Unemployment rate should be going down, all that kind of stuff. The official unemployment rate is 4.5. In China, it's 4.9. So you can compare the two. China should be improving. Okay. Eurozone GDP doesn't tell you anything. Wage prices out of Australia. Okay, that'll be the next Asian session. Then we move over, more pound news. So obviously the pound's going to be moving this week. Now we got the inflation level. So this is really good, right? Right? What did we get before? Unemployment rate. Now we get inflation. Those are the two big things on the mind of the Bank of England. So if you think they might raise interest rates soon, you want hot numbers out of all of that. Okay. I thought this was Tuesday. I apologize. I was going through the calendar yesterday in the day trading group with my mind. Sorry. I just hadn't looked at it yet. So I'm like, this is what I think typically happens. I said Tuesday or Thursday. I was wrong. It was Wednesday. So anyways, retail sales out of the United States on Wednesday, which is really important. And of course, CPI out of Canada. So USD, CAD, this will be moving on Wednesday. Retail sales is really good because who gives a crap about inflation if it doesn't do anything to demand? Right? Prices are high. So what? If people are buying it, who cares? Well, why would they do that? Well, bear in mind, they got free money from the government and sitting in their bank account, and there's so much money in the banks are trying to get rid of it, forcing it into the money markets, and now the money markets are flooded with cash, and there's not enough short-term repos to buy. So the overnight repo market is in chaos because there's so much cash. So prices went up 5%. Who cares? You got 100% free money. So, okay. And that the other thing too is like my own experience. 6 months ago, I spent some cash and I bought some furniture. It's still not even here. I bought it 6 months ago. I think maybe even more than 6 months ago. And they don't even know if it's going to be here in January, right? I mean, I've been buying a lot of stuff and stuff has run out. I bought the last aluminum in America. I bought the last timber tech in America. Now you can go to the store and buy some timber tech and they're like, yeah, maybe 6 months, right? So it doesn't matter. Now you can't spend your money. And if you don't feel comfortable going to Disney, I know people in California that haven't left the state or even their region in 2 years. Okay? I know other people that like fly to Colombia, fly to Mexico, fly all over the place, and it's not a problem. So like some people just, right? There's nothing to spend the money on. You don't leave the house and you don't buy anything. But look, you're still going to take your free money and buy, you know, your nephew, your ungrateful nephew. You're going to buy him, I don't know, something on Amazon, right? Like, dude, you're going to buy something on Amazon, right? Okay, cool. Anyways, so let's move on. Lots of right? We go pound, dollar, CAD, Kiwi. It's like Wednesday is a huge day. Very cool. Okay, very, very, very cool. How about Thursday? Weekly jobless claims. Yeah, gotcha. CPI out of Europe. Okay, cool. By the way, I was listening to somebody that said they don't expect, I forget which investor or which bank or which fund it was, but in an interview said that he doesn't expect the stock market to go up next year in the United States. It'll be basically flat because we're up, right? I think I'm up like 25% in the last 6 months of investing in the stock market, just in 6 months. So anyway, dude, maybe it doesn't go up further next year. That's what this guy was saying. And therefore, you probably want to cash out at the end of the year, which is a good cash out period. And then what? Instead of buying the S&P 500 on a dip, invest into Europe is what he was saying. Well, I started that probably about the same, about 6 months ago. Started buying up Europe because it's cheap. Cool. Which would change the capital flow structure. Do you understand that? If this guy is right, and I can't remember who, if I did, I'd cite my sources, but just someone in an interview with managing billions of dollars, and he's like, yeah, we're going to slowly this isn't his words, but he's going to slowly tiptoe out of the U.S. stock market, which often is like rebalancing and stuff, right? But some of it will actually be taking profit. And now he's got cash and he's going to buy dips in European stocks because they're cheaper. And he thinks they're more likely to go up. And what I've been telling you is Europe is probably 2 years behind the United States. So maybe 2 years from now, it'll have a great, 25, 50, 100% run from where it is now. So I don't know. But that's what I've been doing. That's what he's been doing. And that would change the direction of things, right? So we got to keep an eye on that. So you want to see a recovery story out of Europe is what I'm saying. Okay, you want to see some stabilization. Of course, we got to fix this COVID thing in Europe. Oh, another piece of good news. India opened its borders today after almost 2 years of being closed. Right? Now, there was lots of worries that Diwali was going to really mess things up, that everyone gets together in close quarters and COVID freaks out. But I guess if they're opening the borders, that hasn't happened, which is very cool. Okay? So I know a billionaire in Mumbai, and I texted him today. I'm like, hey, man, that's a really good sign. That's a good sign, man. And I said, I can come to India because he's like, come to India. I'll show you Mumbai. I'm like, okay, wouldn't that be fun? Rolling through India as a billionaire? Oh, oof, it must be nice. It's probably a good place to be rich. I'm not sure. Right? Anyways. So look, every day is an important day. I don't think any of this news is freak out news. You might maybe retail sales, but I don't know. Again, there's just so much debate around inflation. Is it transitory? Is it not transitory? There's a lot of debate, and the Fed actually reports it. What is it? The UIC? Hang on. Well, now I'm really stretching into my economics. Fed report UID or UIC? UIC. Federal Reserve Bank Financial Institution Reports, Bank of Chicago. Oh, I guess we'll do it here. No. I don't even remember what it's called. UIC? I don't think it's Chicago, though, I think is the issue. Give me 30 more seconds. Let me start over on Google. See if I can find it. There is a very... Oh, I found it. New York Fed does it. Ho, 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 ho. Wee. This is important information. Okay, this is interesting. You may not have heard of this. This is probably something that the media doesn't track, so on and so forth. Okay? You might want to do some research here. Play around with this one. Underlying inflation gauge. The UIG captures sustained movements in inflation from information contained in a broad set of price, real activity, and financial data. Okay? So what are they trying to do? Okay, what's this report about? I'm just trying to see if they further define this. You might have to go through the Excel spreadsheets and stuff. I'll give you a link so you can play around with it. But I'm telling you, this is stuff that the Fed watches. This is updated every day, I believe. Okay? Updated every day. So I imagine key players at the Fed receive this every morning. They get an update on this. And are they going to further define it? One of the things they're looking at is transitory versus non-transitory inflation. Okay. Not this one. This isn't clearly defined. It's not saying that it's trying to find basically sticky inflation. Underlying inflation. So you'll have to look at it, right? Sustained movements in inflation, I think, is probably the best way you could look at this. Sustained. What does transitory mean? Not sustainable. Okay, yeah, no, I guess you'll have to go through in here and get the more information. But I want you to look at this. Is it transitory or is it non-transitory? And the Fed knows exactly what it is. They track it every day. So if you find that interesting, would you please give me a thumbs up? Give me a like. Come on. People are master debating about this. And I'm like, why don't you know? Why are we debating? Why don't you just look at what the New York Fed... Probably I would say the most important Fed of all the regional banks. The New York Fed president always gets to vote on the FOMC. The only Fed president that always gets to vote on the FOMC. So I can argue because of that, the Federal Reserve Bank of New York is the most important. Okay? And they compile and look at this daily. So why are we debating? Why don't you just know it? That's what I say to the experts. Like, how come you don't know this? Well, I only know what I read in the Wall Street Journal. All right. Well, there you go. Well, Turkish lira isn't a currency anymore. Okay? It's fake news. But we do trade exotics. Missing in action. So I don't know where you've been missing. Okay. So anyways, Coolio. Take a look at this. Got our giant double top. Okay. Got our giant double top here. Okay. If you zoom in here and go to the hourly now, I think you'll find that this candle was the China news. Okay. Boom. Okay. Down, down, right. Big bearish engulfing candle. Set it up pre-London. Gone. Why isn't it a currency? Because it's got 75,000% inflation. And by every standard, the central bank is doing a horrific, negligent job based on what the central government is forcing it to do, and would be a laughing stock of the central banking community. Okay. Also, Turkey has almost no exports right now and a collapsed domestic economy. So it's not a currency. Maybe you can exchange it for like Venezuelan pesos or something. Okay. But why would you lend Turkey 1 billion euro when they have no euros? Why would you loan Turkey 1 billion USD when they don't have any USD? Okay? That's the issue right now. So why doesn't Turkey have that? Why is the Central Bank of Turkey literally have no dollars or euros in the vault? Turkey doesn't export. Why don't they export? Because there's no productivity. And this is a malfeasance of the government, a crime almost of the government. So if you lend them $1 billion or 1 billion euros, what'll happen is when it's time to pay the loan, Turkey will have to sell lira to buy euro, which will devalue the lira even further. So it's a terrible, 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 terrible economic situation for the Turkish people, and it's all man-made. How's that missing in action? Sounds opinionated, right? The one thing is, I'm usually pretty clear, right, on my thoughts. So anyways, for clarity, that's my answer. Okay. Boom. Ho. Whoa. Yeah, I know. 16% interest rate. Why? There's a good chance you don't get your money back. Okay. Greece used to have 20%. So how come people didn't lend money to Greece? Even at 20%, how come? Why was it that investors around the world refused to lend Greece money? Oh, missing in action, you're Turkish. By the way, I mean, no insult to the Turkish people. I have Turkish friends and all that. And I know Americans that have moved to Turkey for a couple of years and they love it and they always go back and stuff like that, right? So I'm talking about the government and the government forcing the central. Now, even the central bank says things like the central bank is forced to do stuff that they know is wrong. And that's where I got a big problem. When the central bank's like, this is a really bad idea, Erdogan. This is the exact opposite of what we should be doing. And Erdogan says, shut up or I'll fire your ass and I'll get someone else to do it. All right. When you get that's bad. And that's how you get to a Venezuela's thing. So if you're Turk, okay. No offense meant. I'm talking about government policy and why Turkey basically as a worthless currency. that no one would invest in. Okay, going back to Robin, 16%. Well, Greece was at 20%. Why do interest rates go from 5% to 10% to 15% to 20%? And I think it was even 25% for a bit. Okay? Why does this happen? Well, Greece needs money. So they're like, hey, lend us money, we'll pay you 5%. And the whole world looks at this because everyone in the world can lend them money. Everybody on the whole planet, everybody can lend Greece money during the Greek debt crisis. And everybody said, dude, I'm not going to lend you money. You don't have any money. You're never going to pay me back. You're going to screw me over. I'll lend you $1 billion or even $10, and you're not going to pay me back. So no. They're like, well, what if we paid you 10%? Like 10%? Dude, you're not going to pay me back. You don't have any money. You don't have any revenue. All you have is expenses. You're going to borrow my money, pay your expenses, and still be dead broke. You won't have any money to pay me back. Well, what about 15%? Same problem. What about 20%? Okay, 20% sounds good, except there's a 90% chance I'll get zero money back, yet alone 20%. So what happened? Does anyone know what happened? How was the Greek debt crisis solved? Implied ECB guarantee. I didn't spell that right. I apologize. But, okay, Mario Draghi, the head of the ECB, in a press conference was asked about this situation, and he said the ECB is willing to do whatever it takes to protect the euro. That's all he said. Okay? 6 months later, interest rates were 5% on Greek debt. Why? If Greece defaults, bondholders will be bailed out by the ECB. He never said it, but it was a wink, wink, nudge, nudge. Go ahead, boys, do some investing. Go ahead, lend them the money. And what happened was the ECB bailed out Greece with other people's money. Oh, it was a beautiful play. I don't know if it was a mistake or if it was a plan, but it was a beautiful move. The ECB bailed out the entire country of Greece from their debt crisis with nothing more than a wink, wink, nudge, nudge. Never even spent a euro. Okay? Now, right? President Mario Draghi of the ECB is now Prime Minister, or is it President, of Italy. So, cool. Very cool. So, smart dude, I guess, huh? So, why would you lend Turkey money for 16%? Why? Because the Central Bank of Turkey is going to guarantee it? But it's broke. It doesn't have any foreign exchange. It doesn't have any foreign currency. All it can do is print lira and make it worthless and more worthless and more worthless and more worthless. So if you want to invest, look, dude, it's your call, brother. But I got Mexico. Let's go over to Mexico. Okay, let's go over to Mexico here. I like the Central Bank of Mexico. I think it's very well run. So I don't know what you think of when you think of Mexico. Okay? I often think of good things. There's some bad things, but I think a lot of good things. And the Central Bank of Mexico is very well run. They do good research. They have intelligent people. I don't believe it's corrupt. So I think I like it. I like it. And it's right next door to the United States of America. So there's some sort of positive correlation. So I get it. Good. And 6% interest rates more than reasonable. South Africa, South Africa, maybe not as good of a run central bank, but I'm not trading that way. That's not why I'm trading South Africa. I'm trading South Africa. Sorry, I'm cleaning my glasses and I'm looking for that little silky thing. My glasses came with a pair of panties, I guess, but all right. I trade South Africa more on a global trade basis. Okay. So it's more of like, what is the global business activity? Is the globe in general, let's say at least the OECD countries plus China, for example, how are they doing? And are they doing business together? Are Americans buying cars from Japan? Are Americans buying cars from Europe? So on and so forth, right? Like, how's that business activity going? And when you're building stuff and you're trading stuff, money goes one direction, products or services go the other. But of course, if you're going to build a car, you're going to need some steel, you're going to need aluminum, you're going to need semiconductors, you're going to need leather, you're going to need all kinds of interesting things. So to put together a car, you're going to need to like exchange cash or capital, right? You're going to have to exchange financial capital for physical natural resources. Somebody's got them. Well, South Africa has all kinds of things. I don't know if not, right? Not many people have zebra skin seats in their car, but they could. I knew somebody that had Louis Vuitton leather seats in his Jaguar, front and back, with the logo and everything. I'm like, oh my God, is this Louis Vuitton? It was a shame too, because he was turning a corner and some guy was coming around the other corner, doing 150 miles an hour, lost control and hit his Jag and totaled it. And that was the end of that car. But South Africa exports a lot, right? It exports a lot. That's how it earns its foreign exchange, currencies and stuff, right? And how is the central bank managed? I don't know. And how is the government managed? Not for me to say. But if America is buying stuff from China, China's going to buy stuff from exporting countries. And well, guess what? South Africa is an exporting country. So cool. So it's just kind of that play. It's a great macroeconomic play. Plus, you're going to earn a yield. Is it dangerous? Yes. Is it risky investing into an emerging market? Yes. Yes, it is. Am I fairly compensated with a higher interest rate? Yeah, I believe I am. Great. Do I have to worry about South Africa defaulting? Well, look, if South Africa is indeed exporting to foreigners, then the central bank will indeed have foreign exchange currency, foreign currency, in their vaults. And that's how it works. So, right? They're handling like, when you buy euro dollar, where does the euro come from, right? If South Africa is buying dollars or buying euros, they want to do a deal and they're buying euro, where does the euro come from? Well, it comes from the vault. Okay, so anyway, so they have vaults because when Europeans are buying South African products, they're buying it in euro with an exchange rate. So suddenly the central bank has euro in the vault. But they don't have the diamond, or they don't have the gold anymore. That was exchanged, right? So anyway, so the central bank would have foreign money, foreign reserves, and the central banks report their foreign reserves and all that kind of stuff. So is South Africa riskier? Okay. Sure. Is it riskier than Turkey? No, Turkey's not even investable. It's not even investable. That's why I said it's not even a real currency. What currency? There's no currency. Okay. Cool. So whatever. Yeah, looks great. Double top, big drop, lower high, lower low, lower high, lower low. So this is what you'd be hoping for. Okay. So anyways, that's good. I want to go through, we got so much to do. Let's just move on. Let's move on.com. No, let's not do this one. Let's go to this one. Okay. Big dog. Okay. What we were talking about last night is riding the 21 up to 134.50, in which we would be challenged. Oh my God, that's what happened. Okay. So anyways, we have it written down here, 134.50. Right? And we got there. Let's try to maybe zoom in a little bit. And 134.50. We're almost there. Let me do 134.5. Okay. So we're kind of getting there. That's the sort of the warning. Be careful up in there. There's a lot going on. If you look, remember, I always ask you to look left. Look left, brother. Look left. Huh? You don't want to pump up the volume at resistance, right? Pump up the volume, pump up the volume, pump up the volume. Trade, right? No. Okay? But that is interesting, but not likely. Not likely. Okay? Check this out. Did this matter? Yeah. Remember, that was the target right here based on this. The target, our projected low, okay, 3 weeks ago for the pound dollar was I can't even see it. Sorry, 133.54, I think it was. I'm going from memory. Okay. Oh! Okay. So Raven's like, good breach of the standard deviation. Yeah, it might go 2 standard deviations from that, right? But I think the more interesting thing, even though that is good if you're a bull, that it started right there. Okay? Like, oh my God. So the fact that it did this is good, but if I didn't have this, Raymond, right? If I didn't know why, then to me it'd just be noise. It could still do whatever. Like, I don't understand the why part. Because if it was just technical, if I got rid of my pivot points, I would sell this all day, every day, wouldn't I? Without even hesitation. Boom! Sell it hard. That's an easy roll reversal. But now I look at this and go, oh, but wait. It's not so clear. There could be one of these also in the cards. So to me, this is the more important. Okay? And then I would say this would make me expect a breach of the standard deviation. And then when I see it, I'm like, dude, that's exactly what I thought was going to happen. And that would give me more strength to do that than otherwise. So now I see this and I'm thinking 3 days in advance, where technical analysis would just say, sell the lower high. And I'm thinking, maybe not this week. Maybe this week, but maybe not this week. And that's interesting because ultimately I'm a bull, but I look at that and I still can't really be bullish. But you can day trade this, no problem. But you wouldn't swing trade it, and you probably wouldn't position trade it. But you can day trade the heck out of this. Look how beautiful these roll reversals are. This is just easy peasy lemon squeezy, right? Okay. And if you guys recall, in the day trading group, we met here. The market was closed. This is what we talked about. Is this the dip, man? Okay. And somewhere in here was the positive Chinese news. So, right. But that's pound. It's not even a good setup. The pound was one of the worst setups. It's not even a good one. Euro was not much different. And so I'm like, no, I'm not even interested. I didn't even want to really do any analysis on it at all. And look, nothing happened. Good. Not interested. Pass. Okay, Aussie and Kiwi, much different story. Aussie, okay, was starting on the S1. And I said, there you go, ladies and germs. Ladies and germs, that's interesting. Pound and euro are way down at the projected lows for the month. Not Aussie. It's down, but not down that much. Okay? Okay? You zoom in. Okay? Check this out. This is the news coming out. Pachow. And that's what I was doing, sitting in my yard, smoking a cigar, drinking wine, got a big roaring fire going. I'm sitting in the dark, it's freezing cold, and I'm watching the news on Bloomberg. Pachow, pachow, pachow. Okay? Riding that 21, baby. Riding that 21. Glorious. And we're at the daily profit, so do what you got to do. Okay, but make sure you make the big girl decisions. Lovely. I woke up smiling ear to ear this morning. Kiwi, we analyzed yesterday, and what did we say? Even better. Okay, even better than Aussie, euro, pound. Cool. Check this one out. La, 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 la. So our trade plan here was boom, shalakalaka. Nice. Okay. Target today. If you're a day trader, 2.5 hours ago, you put the money in the bank, and now you're just going to hang out at Starbucks reading existential poetry. Right? You're like, I just love French existential poetry, right? Anyways. What's the point of being alive? So anyways, yeah, now it's coming down. But isn't it supposed to? Like, this is what the chart says. Yeah, it's going to come down now. Oh, is that righty? So now what? Day traders are going to front run tomorrow. But this could be money in the bank, gas in the tank. Okay? Of course, our gas is dollars, right? So very, very cool. Riding a 21, all good in the hood. Nice. Cool. Let's zip over to the yens. Okay. Okay, let's take a look at this one. This is the trade, right? On this account. Oh, I can't even zoom in. Let's do it this way. Here's what happened. When we met here, the markets were closed. The plan was buy a dip into this region here. Okay, cool. That was the plan. I'm sitting on my driveway and I see this, and then I see this, and then I see this. And then the news came out positive, and pachow. Give it to me, baby. Okay. Cool. And right now, we have breached the daily target. And we do have a 21.55 cross. Of course, we didn't then. Mr. Shine got it too? Right on. Well played. Okay. Give it a little more than that. Cool. Cool. Neat, right? Neat. Now, the biggest point is not being right or doing a new scalp or something. If anything, like, I want you to see how you can enjoy being a currency trader. I have a belief system that if you're looking for ways to cut corners, if you're looking for ways for some magic EA to make decisions for you, if you don't like reading reports, if you don't like reading the news, if you don't like watching the charts, you shouldn't be a trader, I think. Because ultimately, you're not going to add any value to anybody. And I don't think you're really going to make any money. You won't stick around. You won't have the fortitude, the work ethic, the patience, the discipline. You should really enjoy it. So if you like the idea of sitting in the dark by yourself with a roaring fire. Hey, my wife came out a couple of times. How you doing? My daughter came out. She's like, are you sure you like being alone? Like, I got schoolwork, but I'll come sit with you. And I'm like, oh, baby, that's really cool. But no, I'm Canadian, so I'm not cold, and I'm an only child, so I ain't lonely. But you're welcome to sit with me, but I'm okay. So it was really nice that she checked out on me. But I'm watching my phone, placing trades, watching the news. I got Bloomberg going, just loving being a currency trader. And then you wake up in the morning, what's the first thing you do? You grab your phone, and I see the Aussie, and I'm like, oh, what a great day. Okay, what a great day. I'm thankful to be a currency trader now for 20 years. Being a venture capitalist, you have to wait 5 or 10, 15 years to find out if you're profitable on your investment or not. As an entrepreneur, it's a struggle. You're always struggling to do more, and you need more cash, and you need this and need that. And it seems like you, at least for me, as an entrepreneur, it was always like 175% day and night and living on nothing, because everything went to the business, then everything went to the employees, and then after that, there was nothing. There were plenty of times where all I did was pay employees, and then I go home with no money to pay my rent. Have you ever been in a situation like that? That's a hard gig, man. That's a hard gig. But you're like, well, maybe in 5 or 10 years, I'll be a millionaire. The cool thing about Forex is it's real time all the time, instant gratification, and you can adjust immediately because you're so liquid. So I wake up in the morning and I'm grateful for the opportunities I have in front of me. I wake up grateful that you're in my life and that you inspire me to keep improving and stay inquisitive about being a trader. So thank you for everything that you do, and thank you for being a subscriber. Thank you for being a client of Trader's Way. And if you ever want to join FX Bootcamp, I think we have an absolutely amazing, supportive, positive, professional community. We're not a big community. There's not thousands of us, but boy, oh boy, what an enlightening professional experience that is. So thank you for being part of that community as well. So peace on earth. May the pips be with you. May our profits be above average. I'll see you, if you're in my day trading group, I'll see you later tonight, or this afternoon, I should say, for the New York close. And I will see everybody else tomorrow, huh? Okay. Della says, been with Wayne for 15 years. Right on. Thank you, Della. Yeah, see you at 4.